So it's great being here, and as was said before, I mean, really the theme of the day is celebrating the success of revenue management. And one of the things we spoke about a lot is how do we do that? Revenue management is all about facts and figures, so it should be easy. But still, I think for us, it's sometimes difficult to really do that. There's other folks that really claim the success of top-line results, and we really need to come to terms about how do we do that, and how do we really prove that revenue management is giving a good and foundational contribution to the organization. So today we'll talk about two little topics, but very important. The first one, we're looking at a study that we've done internally in our organization about the revenue management resources and market share, and what's the correlation between the two, to sort of look at, is it really proven that having a better revenue management workforce in the hotels is driving top-line performance. And then the second one is a research paper that was done by HSMIA about revenue management incentive programs. So I'll share it to you, and then we'll have a little bit of a Q&A. So if people have some ideas and best practices, we can definitely have a bit of interaction around that in the end. So we all know that distribution is changing, and that the way that we operate in our hotels today is very different than it was about 10 years ago. We're going to talk about it a lot, I'm sure, over the next day. But the way that customers are buying us in today's connected world, and transparency of pricing and all the distribution channels that are available, really changed the way that we need to look at commercial strategies in our hotels. And that's really how revenue management got started, and what we do, and how revenue management has changed over the last couple of years, and how it shaped the way that we do business in our hotels. We tend to focus a lot about the tools. So we have a great revenue management system, we have our Excel sheets, we have our analytical tools, we have business intelligence, but many times that's the part we focus on a lot. And revenue management traditionally is about the facts and figures, and that's our comfort zone. But it's important that we have the right people in our organizations, because they, in the end, are the ones that making the difference, that using the tools to make those strategic decisions and ultimately drive the top-line performance, and also benefit the bottom-line profitability of our hotels. So we took taken a step back and say, well, how do we look at that in our organization, about what is the right balance of resources in revenue management and in the other commercial aspects of the team. So one thing we first looked at and say, what has happened over the last couple of years? And we did an interesting study, and this was for a particular region in our organization, where we said, well, over the last 12, 13 years, how did the booking behavior change? Because we talk about it a lot, and we know that there's all these new channels, but how has it actually affected the way that people buy us? We found that the mix between transient and groups was fairly similar, and then wholesale had a little bit of a change around, I think, 2006, but then reasonably stable as well. But the big difference was corporate contracted and the non-contracted segments. And that's not surprisingly, if you think about it, the rise of the OTAs, meta searches, and all the new distribution channels that were there, and people are able to buy ourselves through our own channels. Also, our websites started to be really optimized. We launched mobile apps, et cetera, et cetera. So we also engaged a lot more with our customers, and they started booking with us directly. And you can see a really big shift between those two segments. And corporate people that were buying a pre-contracted rate sort of went down, and the direct channels came up. And that is something we need to think about. How do we then adjust the organization around it? How do we make that more effective? So the second thing we looked at is, okay, we know that this is what happened. How is today our sort of sales and marketing, revenue management, our commercial organization structured? And we found that in that same organization, in that same region, we still had about 70% of the commercial resources, if you look at a headcount perspective, were pure salespeople. So the number of people that booked through corporate channels went down, but we didn't really invest in that heavily in marketing, digital, and revenue management, which is some of the functions that are more predominantly looking after the non-contracted segments. And therefore, how do we really shape our organization towards the new way of doing business? And how do we take advantage of that new buying behavior of our customers? Now, it's always difficult when you talk to your general managers, to your owners, and say, oh, we need more people in revenue management. It's a cost. The thing is, I don't think it's about a cost. It's about redeployment of resources. So you may need the same number of people in the commercial team, but shift that a little bit towards where people today book your hotels. So it's about redeployment rather than adding resources, and that's one of the things we looked at. Now, the second one is as well, I think the revenue management team is quite a humble team, and we sort of get things done. And therefore, there is always a bit of that, general manager says, oh, why do we need that? Because things are going great. And how do you prove that if you have more people in revenue management, you would have better results? So one thing we looked at is we said, let's then go into our organization and say which hotels have one person running the show and which hotels have 2 or more people in revenue management. And what's the difference? And one of the things we looked at, just to make it easier to compare, we looked at market share, RPI. And we broke this down into smaller hotels, up to 200 rooms, hotels of 200 to 500 rooms, and some of the big boxes. And we looked at this by division, by regional area, et cetera, et cetera. I just put up a few slides just for the global view. But we did find that consistently, when you have a bigger organization in revenue management, we saw better returns. So this is the first cut where you look at, so there's sort of 3 sections on there. The first section is, so everything is in 3 years, so that we also looked at a trend. And the first part is where people have 1 person in revenue management. The second one is hotels that have 2 people in revenue management, and then 3 or above is the last one. Now in this graph, the 3 is really, there's only 4 hotels, so it's a very small sample set. But in this view, you can see that in the hotels that had 2 people, the RPI was higher, so we outperformed our competition, and also the year-over-year growth was bigger. Then the majority of our hotels are sort of in this bucket, and that's actually where you see it a lot clearer even. Same thing there. We see that our hotels that had 2 people in revenue management or 3 people in revenue management had substantially higher RPIs, and also the year-over-year growth was higher. And the last one, we looked at it as well in the big boxes, a little bit more, still, I mean, the absolute figures were also higher, smaller sample set. So really the second one is the most valuable one for us. But we were able to prove with facts and figures that having a larger revenue management talent pool is driving results in the organization. And really, that's what we wanted to do. To look at how do people book your hotels, how does that change over time, and have we adjusted our organization accordingly to take advantage of all those new tools and those new channels that we have at our disposal. We were able to prove that having a larger revenue management organization is driving substantial upside in our market share. And therefore, that really brought us to a point in saying, how do we change that for the other hotels where we haven't done that? And we had, again, facts and figures to support that. And again, it is about that right balance. It's not always about adding the headcount, but really looking at redeployment of our resources in order to get to better results. So that's the first part about the organization within Starwood. And then there's another study that we've done, we haven't done. HSMII has done that in collaboration with ZS Associates about incentive programs for revenue management and what that means. So they looked at, it's an online survey that was done in the back end of 2014, only in US and Canada. So this is, not representative of Asia Pacific, but still some very interesting things that we can find out of that. There was 332 people that were part of that, and as you can see, there was quite a large number of years in the industry, so really representation of the industry. If you look at it, one thing that was actually striking to me is it said that in general, on average, they had 4.4 people reporting to them. I was quite surprised because if you look at our organization, that's definitely not the case, that you have more than 5 people in revenue management on average. It did mean that there were a lot of hotels where front desk or reservations reported into the Director of Revenue Management, and therefore there's a larger team, where in our study we just purely looked at revenue management full-time, people doing revenue management, so that's why you see the differences in there. You can see here there's quite a bit of a sample set, a good share of franchises versus owned and managed hotels, larger hotels versus smaller, and also luxury hotels versus upper upscale and mid-scale if you look at the ADR ranges. So again, a good representation of at least the lodging industry in the US and Canada. And they really looked at 3 things. One is the structure of the plan. When obviously the incentive plans were goal-based, there was a revenue target and a payout cap. A lot of it was driven by market share and revenue as the indicators of the incentive plan. What was interesting that they found that the performers got about 1.5% more payout than the average performers. When they compared it with other industries, that was significantly higher, so about three times more, which means that in those industries, they really reward the high performers, where in our industry, there was not too much of a difference. So you could argue how much of an incentive is it to really take that extra step. There was some caps in what you could earn, and there was normally a gatekeeper. And I think this one really sums it up. If you look at it, you can see on this slide what the metrics were that were used in order to get your incentive bonus. Majority was RevPAR index and room revenue, and then total revenue and GOP as well, and then the rest really it goes down very fast in some other metrics, but not really substantial. Guest satisfaction and forecast accuracy, an average rate were 2 others that were sort of more the secondary metrics, but still quite widely used. And then if you looked at it, how does the plan administered? And I think the majority was really done centrally by the headquarters, not really targeted to the individual hotels. So general plans. Normally it was annual or quarterly cycles that they worked on. And there were quite a few challenges with the communication, which was the feedback we got from the people we surveyed, is that really a lot of the times there were changes to the plan, and you only knew it when it already launched. So again, how effective is that if you don't from the start know what you're up against? So that was one of the challenges. Not a lot of follow-ups. If people didn't understand it, it was all a little bit of mysterious about how do you really earn your bonus. And then many people didn't really look at the reports that the incentive plan spit out on performance. They had their own calculations and Excel sheets to look at instead. So again, just to highlight that, you can see that the majority in the different brackets of people that were interviewed, it was annual and sometimes quarterly performance periods, and the same time with the payout frequency. There's a little bit of a difference here, whereas the programs normally ran annually, there were some that paid out quarterly despite that. And in general, the people weren't really that satisfied with the incentive plan. So actually, they used an indicator called the Net Promoter Score, which was negative, which means that people are not really likely to promote the plan to other people, and they weren't really very convinced that that was driving a different behavior in the hotels and for their teams. And as I said, a couple of those opportunities, things that people were looking at to say, how can we make this better? Widen the differential earner, as I said, really make sure that the high performance are compensated by that. How do you recognize people? How do you really set the goals and make people understand what those goals are? And again, I think it was more about, people said we would love to have more generic career opportunities rather than that, just that incentive plan. And here you would see that a little bit in a graph, but similar to what we just said. So again, these were some of the opportunities that people identified, and I mentioned them before, so I won't go through them too much more. But what was interesting is it is a lot about the career opportunities as such and rewarding the high performers. And I think it was one of those, in the majority of the hotels, it was an interesting incentive. People earned their bonus, but it didn't really change the behavior of the people that were in the plan. And therefore you could question how effective it really was to drive your top line performance in your organizations. So to quickly summarize just the two topics, as I said, I mean, we have a changing distribution landscape. We really need to focus on our talent. They are the most important ones to drive the performance. We can have all the tools that we want. We can have the great data to our that we have available, but if you don't have the right people, it's kind of useless. And looking at how do you deploy, or probably more redeploy your resources in order to adjust your organization to the new way that people actually book your hotels, and make sure that you take advantage of all those opportunities out there in the market. Incentive tools are definitely a good retention tool, but you need to make sure that they're effective, and there's a lot of opportunities to make them more effective. And eventually, I think the opportunity here is to really look at how our organization should be structured, and how do we celebrate the success? How can we make sure that we can prove that the revenue management contribution, how much that was to your top line and your bottom line performance in your hotels. And that was it really for me, the two topics I wanted to share with you today.